All good? Yeah. Good evening. Everybody ready? Hi, I'm Jennifer Acey. I'm the Deputy Mayor here in Bernards Township, and I want to thank you for coming to the most popular presentation of our Understanding Bernards series, no pressure, gentlemen, for a repeat performance. But in the spirit of helping residents understand what the role and scope of local government, we've asked important department leaders to do presentations for our community. And one of those things that affects every single resident, that every resident is concerned about, are taxes. So this was actually, again, it was the most popular on YouTube presentation last year. So we asked Sean to come and do it again. There's new information, so we'll see how this presentation is reviewed online for those who are unable to be here present. So this will be recorded and posted. So even for us here, sometimes I like to watch them again and to fill in my notes. So without further ado, I will ask Sean, our CFO. He will share with us this presentation. This is meant to be an opportunity for you to ask questions. And just for clarity, you know, he is required to do a budget presentation. He does a preliminary in the spring, and then he does a final presentation. This is in addition to that, because we asked him, we want to ensure that our residents understand how the taxes are configured and where that money goes. So he will help us understand that. And so with that, I will turn it over. Thank you, Sean.
Joe's going to get us started. Get our presentation up. All right, you're all set.
Well, good evening, everyone. My name is Joe Desiato. I'm currently the Administrative Coordinator in the Finance Department. I've been here for probably since 2020, and I'm going to kind of kick off the presentation that's titled Your Tax Dollars. So today I'll be discussing the layout of Bernards Township Finance Department. It's broken down into 4 divisions. As you can see, divisions are Tax Assessment Division, Tax Collection Division, Purchasing Division, and Treasury Division. On the next couple slides, I'll be discussing the functions and responsibilities for each of the divisions. So the first division is the Tax Assessment. They maintain a fair and equitable tax base for the township based on sound assessment practices and to treat all property types and owners impartially. They have a staff of 5 and is headed by the Certified Tax Assessor. This individual holds a certification from the state of New Jersey, and him and his team are responsible for identifying and placing value on every parcel of land within the township's borders. The township participates in an annual reassessing, which requires inspections on all properties over a 5-year cycle. So this is about 20% of the properties inspected every year. And a main component of this is field inspections, as they serve as a vital part of the program. All properties, physically inspected or not, will have assessments reviewed annually. Each year in the beginning of February, all property owners are mailed their assessment postcards containing assessed value for their current year. If you don't receive your postcard in the mail, you can just contact the tax assessor department and they can provide an additional copy. Moving along, we'll be moving to the Tax Collection Division. The Tax Collection Division is responsible for the billing, collection, and reporting of taxes for all non-exempt township properties, collect and report sewer user fees for all properties within Bernards Township Sewage Authority. They are staffed by 3, and they are headed by the Certified Tax Collector. There is 3 main things that the tax collector is responsible for: is the billing, collection, and reporting of money and enforcement. As of January 1st, 2023, there is 10,687 tax accounts and 7,272 sewer accounts. The property taxes are based on the assessor's valuation of real property and levied for the calendar year. Please make note that the taxes are due the 1st of February, May, August, and November, and there's a 10-day grace period for each of them. Sewer bills are mailed out mid-December and are due January 1st, and are also mailed out mid-June and due July 1st. Sewer user fees have a grace period of 30 days. Payments must be in the tax office by the due date, as postmark are not acceptable for tax and sewer payments. The tax collector provides 4 options to pay your bill, either by ACH, which is a free service, credit card. Important note for the credit card is that if you choose this way of payment, there is a 2.95 convenience fee, and also direct withdrawal, and of course in person. Down by the staircase by Recreation, there's 2 drop boxes. You can also drop your payments off that way. They are monitored 24/7, so you can always drop them off after hours if you feel free. The next division is purchasing. The township has a qualified purchasing agent on staff, and the mission statement for purchasing is to provide a purchasing system that ensures integrity, fairness, and open competition while maintaining a fiduciary and ethical trust, seeking available resources that ensure paramount services to the municipal departments in a timely manner and at the lowest possible cost. A common expression that you'll hear within finance, specifically municipal finance, is the money we spend is not our own. The QPA is responsible for the compliance with all local public contracts laws. He establishes policies to enforce municipal, state, and federal purchasing regulations. About once or twice a year, the purchasing agent hosts an auction and handles the disposal of obsolete and/or personal property. Listed on the screen are several procurement methods that he utilizes. First one being is the request for bid. The bid threshold as of today as of this year, is $44,000. It's reevaluated every 5 years, so next year it's up and it might change. There's request for qualifications, request for quote, which is one of the more common ones that he has to work with, as any Berners Township purchase that exceeds $25,000 and under the $44,000 requires at least 3 quotes. This is to ensure that we're getting the highest possible quality at the lowest price before we make an agreement with the vendor to purchase either goods or services. And additionally, there's also request for proposal and request for information. Purchasing's main focus is to comply with state procurement and contracting laws which govern expenditure of public funds, to provide timely responses, support to internal clients, and ensuring good quality products and services at competitive prices. He assists with our annual audit and keeps current with the development in the field of purchasing, stays up to date on market conditions and pending and new legislation. And he also formulates and recommends purchasing policies and procedures for the township. Our last division is Treasury Division. Treasury Division is staffed by 3 full-time staff members. Treasury is responsible for all functions relative to the receipt, distribution, and reporting of township funds. One of the unique aspects of Berners Township Treasury Division is that we have our payroll in-house. This is very unique, as a lot of municipalities have an outside company process their payroll. This is extreme benefit for all employees, as they can get a faster and more detailed response if they have any questions relating to their paychecks. Berners Township pays all employees by direct deposit. This eliminates the cost of printing paychecks and also postage cost. Additionally, we have accounts payable, which is done in-house, and we process bill lists twice a month, and the bill list information gets sent to township committee meetings. Since 2020, we've been transitioning over to more ACH method of paying our vendors. Again, this has reduced cost on postage, cost on printing the checks, and ultimately has cut down on when the funds are actually deposited, as we don't have to rely on the mail system. Treasury is also responsible for the cash receipts. We have a 48-hour deposit rule. This ensures that a deposit is submitted in a timely manner and we don't have anything outstanding for weeks on end. We also maintain bank reconciliations, books of original entry, and general ledgers. All of these are done on a monthly basis. And the township provides all these services for Sewage Authority and library. Additionally, the Treasury Division is responsible for all financial reporting. There is the annual financial statement, which we'll talk about on the next slide. And there's also the annual and supplemental debt statement. We still remain debt-free. And also there's the audits, which we get audited both for Township and Sewage Authority every year. We also have the workers' comp audit. Payroll reporting does all W-2, IROC, affordable housing. It's not on the screen, but accounts payable also provides 1099 NECs and 1099 miscellaneouses to vendors who qualify for those tax forms. The AFS, or Annual Financial Statement, reports the results of all township financial activity for the prior year, and it's posted on the website and it's due in February. Berners Township, again, is one of the few townships or municipalities that actually completes their own AFS report. A lot of other municipalities kind of offshoot that task over to another agency. Lastly, I want to highlight the shared services that the township takes part in. For those of you who don't know, shared services are powers and duties and functions that can be shared between municipalities. With the pressure of budgets, many municipalities are considering shared services with neighboring municipalities. This can help reduce the cost of for municipalities and positively impact your property taxes. The ones that Berners Township takes part in are the Sewage Authority, Library, and Public Health and Fire Prevention. A couple years ago, our court was moved over to Bedminster. That's part of a shared service. And we also take part in the Somerset County recycling. With that being said, I'm going to pass it over to Sean, who will complete the presentation. Thank you.
All right, so first of all, I want to thank Mr. Desiato. He drew the short straw in our office and was the unlucky soul to get to help me with the presentation tonight, so thank you, Joe. So Joe kind of outlined just kind of the lay of the land of how our department's structured and all the functions that we do. My name is Sean McCarthy. I'm the Chief Financial Officer for the township. We put this presentation together last year as far as the Understanding Bernards series, and I hope it's been helpful. Happy to present it again. You know, the goal really is to try to kind of explain some of these things in some simpler terms. So if you've ever had the pleasure of reading through our budget documents or our AFS, you know, those documents are in a format that are required by statute and are certainly not the most user-friendly thing to try to work through. So hopefully we can kind of dispel any misconceptions that might be out there and kind of explain that a little bit more simply. So first, I just want to start with some tax terms, couple definitions before we get into discussion on just taxation in general. So first of those is the property tax levy. So the tax levy is the total dollar amount to be raised by taxation to be used as revenue to fund local government programs and services. So essentially this is the total pool of tax revenue that we collect to provide the services that we do. And I'll note that that tax levy funds just about half of the revenue that we use to offset the budget every year. Then we have the property tax rate. These are two that are commonly confused, but they are definitely two distinct things. So the property tax rate is the percentage rate calculated against the assessed value of each homeowner's property ad valorem or according to value. So that rate is the rate that we then use to determine your individual property tax bill per $100 of assessed value of your property. So then what is assessed value? That is the value placed on real property based on market value to determine ad valorem property taxes. So within this definition of assessed value, two terms that we should identify here, real property, which is land and all things that are attached to it. Anything that is not real property is personal property, and personal property is anything that isn't nailed down, dug into, or built onto the land. So the example I always use there, as far as something that wouldn't be considered real property and wouldn't factor into the assessment of your property is, for example, your window dressings. Conversely, things like updated bathroom fixtures or trim and millwork are all things that are part of your home, so those do factor into your assessed value. And then we have market value, which is the price a willing, knowledgeable buyer would pay a willing, knowledgeable seller on the open market, right? So for us, as Joe mentioned, we're a reassessment district, so our assessed value every year is driven by the current real estate market and that value. So the township serves as the collecting agency for the four taxing districts you see on the screen. Each of those entities levy their own taxes. We then collect them for those agencies and distribute them to them over the course of the year. So each year on January 1st, Bernards Township Library is provided their statutory levy of roughly $2.5 million. Each month, Township cuts a check over to the Board of Ed for about $8 million for their levy, and then $6 million goes to Somerset County quarterly for their levy, and that levy is made up of their general levy and also their open space tax. Because of the timing of how some of those payments have to go out and how we collect taxes, which is quarterly, that does tend to create a little bit of a cash flow challenge for us, so that's something that we spend a lot of time keeping an eye on and making sure that we're able to make those payments as we're required to. So by statute, the township must pay other districts 100% of their tax levy regardless of collections. So this means that the school, county, and library will always get their full tax funding regardless of who does and doesn't pay their taxes. So essentially, we're doing all the work on the collection side, paying all those levies out, and then we get paid last. So actually, according to the law, township would be required to issue debt if collections didn't meet the school and county levies. Now, we're fortunate in Bernards Township that our collection rate has always been very high. Typically, we're over 99% on collections, but things obviously can happen. And perfect example of that is, COVID. Go back to 2020, and as was the case with everyone, we were really unsure as to how that might affect everyone's ability to pay their property tax bill. So we actually went out and got pre-approved for those tax anticipation notes in the event that we weren't able to make payments to the school and county. Fortunately, that was not the case, but just an example of things we need to be cognizant of as the collecting agency. So this is the total tax levy for 2023. You can see total levy for all districts at $146,653,000, and then the proportion share for each of the districts of that total. So you can see the school is at 66% at $96,429,000. Somerset County is at 16% at $23,344, followed by county open space 2.3. And the municipal libraries 2.5. That levy is established by statute and makes up 2% of the total levy. And then what's left is 15% for the township's levy, which for 2023 was just under $22 million. So that's the piece that we have control over and the piece that we use to fund our budget. So as I mentioned, the tax levy is just a piece of the revenue that we use to fund our budget, and again, just under 50%, as you can see here. The second largest piece is our surplus that we anticipate at about a third, just under 30%, with the balance being made up of other fees and permits. Our energy tax receipts, this is what's commonly referred to as state aid, and some other smaller revenue items. Unlike the state and federal government, our budget must be balanced, so for every dollar we appropriate to spend, we have to have a dollar of revenue to match that. And this is how we fund that entire budget. For 2023, total budget was approximately $45.8 million. So, you know, another common misconception is that that entire budget is funded by taxation every year, and that's not the case. We do rely pretty heavily on surplus. Because of that, we do have a formally adopted surplus policy, which dictates exactly how much surplus we can use in a given year, and what we must do to make sure that it gets replenished from year to year. And this is just an illustration of what that breakdown looks like. So we took the average assessed home in 2023, applied this year's tax rate to that average assessment, and we come up with a total tax bill for that home of $13,589. And then this is just the breakdown based on those percentages we looked at on the last slide. So of this bill, $8,969 going to the school, about $2,300 going to the county, township just over $2,000, and $272 to the library. So really the takeaway from this slide is that when you hear us talking about the budget and hear us talking about controlling municipal taxes, you know, this is the piece that we're working with, and really the piece that the township has any control over. Okay, so how do we come up with a tax rate, and what is a tax rate? So the tax rate is the rate applied to the value of your home to determine your proportionate share of the total tax levy. So to come up with that number, we need two pieces of information. One being that amount to be raised by taxation, so that's that tax levy we just talked about, and the total assessed value of all property in town. So if we have those two numbers, you'll recognize this as the tax levy for the township this year. Divide that by our total assessed valuation, and again, this is all properties in the township at just about $7.8 billion. Multiply that by 100, and we come up with 0.283. So this is just the municipal portion tax rate, and this would be applied to the value of your home per $100 of assessed value. So what makes up that total assessed value? This chart is really the end product of the tax assessor's office work each year. So what we have here is every parcel in town broken down into the corresponding categories. So we have the count of each of those parcels, the land value, the improvement value, and our total net valuation, which gives us that $7.8 billion total assessed value number. So this is how you know you live in New Jersey when you're at your psychiatrist's office talking about taxes. But fortunately, we know that happiness is not real property, so it does not factor into your assessment. Again, in Bernards, we are a reassessment district. We have been since 1989. We were actually one of the first municipalities to adopt reassessing. So as required by being a reassessment district, we have to physically inspect 20% of all properties each year. So that's all of our field inspectors going out and visiting your home. Despite the fact that we only actually see 20% of homes in town, we do reassess all properties in town, and that's done with market data. And that's what our assessor's office spends a lot of time doing in analyzing that data and making sure that his assessments are as close to real value as they can be every year. So we'll take a look at what does annual assessing mean to you as residents, and how does it affect your taxes? The key takeaway and most important thing to know is that annual reassessing is revenue neutral, right? So that means that the assessment alone has no impact on the total taxes collected in a given year. So this is another one of the big common misconceptions we have, and I think it's partially due to the timing. So every year in February, those assessment cards come out, and in a year like this year, where the market is doing extremely well and going up, you might see that property assessment and say, my assessment's gone way up, that means that my taxes must be going up. But what we know now is that that's not necessarily the case, right? Because it takes all three pieces. You need your assessment, the total tax levy, which determines your tax rate, which is what then ultimately determines what your tax bill will be. And this year is the perfect example of that. So for 2022, the municipal tax rate for municipal services was 0.299 per $100 of assessed value. In 2023, because of those assessed values going up and because of the fact that the total tax levy stayed relatively flat, the rate actually decreased to 0.283. And that may not seem like a big difference, but actually every penny on the tax rate equals about $778,000 in tax revenue. So that's a big number. So what many people saw when they expected a huge increase based on the assessed value was that their actual bill came in slightly higher, or in a lot of cases even flat, despite that increase. Annual reassessing allocates the share of the total tax burden to each property in proportion to the value of each property. And that's really the point of annual reassessing, is to ensure equity amongst your neighbors, that everyone's paying their proportionate share of the tax levy based on the current value of their home. The alternative to annual reassessing is a reval. And if you've ever lived in a town that does revaluations, you'll know that, because your assessment for years and years and years doesn't change at all, and then all of a sudden, 20, 30 years later, a reval's done, and you can imagine how much over that much time the assessed values can swing. So that's a burden on potentially the taxpayers and business owners, and also the township, who's paying for a revaluation. That's a huge undertaking and is quite cost prohibitive. So we've found reassessing to be very successful here in Bernards. And then the last note I'll make on reassessment is that it may cause increases for some and decreases for others. And again, that's really just because of the nature of the real estate market. Good example of that is, pre-pandemic, we actually saw larger homes, higher square footage homes with more rooms, declining in value, with smaller homes increasing. And then a year or two later, the pandemic hits, and all of a sudden everybody's working from home and needs more space, and it completely switched. So all those larger homes' values started outpacing the smaller homes. And that's certainly the case every year. We actually, a number of years ago, started tracking, and we show this during our budget presentation to try to illustrate this, tracking 16 or 17 different properties in town over the years to kind of track the swings in their assessment. And last year we found, when we applied the tax rate to the value of those homes, a decrease of up to $90 all the way up to an increase of $90 for homes, not very far from each other. So something that we always keep an eye on and try to point out. Okay, so we looked at how to calculate the tax rate, and here we actually calculate the tax bill based on that rate. So here we have an example of a home assessed at $500,000. We know what the proposed tax rate, this is the 2023 tax rate, so this is actual. Multiply that by your assessed value, divide it by 100, and you can come up with total annual taxes for municipal services for this home. And again, this is the municipal portion only, but certainly this same formula can be used to calculate the full tax bill if you use the full tax rate for all the districts. Okay, so this is then. It's July, and the tax bill comes, and we're trying to determine what the actual increase in our taxes is. So, unfortunately, This is the format that we're required to issue these bills in. It is not the most user-friendly, but you can determine what that increase is, and we'll show you how to do that. So, taking a look at this. So, this homeowner knows that they paid $1,381.52 for each first and second quarters in 2021. So that would have been the bill that they received before this one. So then subsequently they get this bill, and it shows final taxes due for third and fourth quarter in 21, which we see here. Right, so if we compare just the amount that we paid in first and second quarter of 21 to this amount for third and fourth quarter in 22, that looks like a huge increase of over 5%. The thing to keep in mind is that because of the timing of how these bills get issued and when our budget gets adopted, the first and second quarter are always estimated preliminary amounts, right? So the key here to do a real comparison is to look at total billed for the prior year versus total billed for the current year. And you need to look at two numbers here to really determine what that is. First is total 21 taxes due, and this is an example for 21, of $566,535. Like we said, this homeowner knows what they paid for first and second quarter. That would have been the estimated amounts from the prior year, $1,381.52 for each quarter. And that is this number here, less 2021 previous billed. So 1,381.52 times 2 gives us 2763.04. The one piece of information to know there is that this previous billed amount is 50% of the prior year's total taxes. So if we multiply this number by 2, that's the number we want to compare to the current year to see our year-over-year increase. So we multiply that by 2, and our taxes for the 2020 year are $5,526.08. This is the number we want to compare to 21 taxes, and that is an increase of $139.28, or 2.5%. So certainly better than the 5% increase that it appeared to be if you just compared quarter to quarter. Now, you might look at that 2.5% increase and say, you know, wait a minute, I know there's a 2% tax levy cap in New Jersey. There's no way that that increase could be over 2%. So there certainly is a tax levy cap in New Jersey. That law was established in 2010 to try to help slow the growth of municipal property taxes in New Jersey. What that cap does not do is cap the property tax bill. So again, remember, we're talking about the tax levy, which is that total pool of tax dollars used to fund all of our services, not necessarily the tax bill. What it does do is state that the municipal services levy can increase no more than 2% with exceptions, including pension and health benefit increase costs, debt service increases, construction, and emergencies. It also allows municipalities to bank unused levy dollars for 3 years. So what that means is while there is a 2% levy cap, there are a number of exceptions to it and that banking. So for example, this year, Bernards Township municipal levy increased by 1.98%. If we were to have used all of those exceptions and the banked cap dollars we had for the past 3 years, we could have theoretically increased the tax levy by another $1.2 million, which would have increased that levy, or would have made that tax levy increase well north of 6%. Now, we did not do that, and typically, you know, Bernards Township does not increase their tax levy more than 2%. In fact, over the last 8 years, we have been under that 2%. But I mentioned this just to illustrate, you know, you may see towns with a tax levy increase well over 2%, and this is how it happens. And it's totally allowable within the law. Now, there's also a appropriation cap of 2%, which, you know, in that scenario probably would have limited us using that total $1.2 million in additional levy. So those two caps kind of work concurrently, but even so, it would allow for increases of well north of 2%. Okay, so that wraps up what we have to talk about on taxation. We'll kind of take a look at the actual budget itself and see how those dollars are being spent. So the township's budget is adopted annually and funds all of the municipal services you see listed on the screen there. Our budget process starts in September, so we actually just started working on 2024's budget, and that's when all of our departments start compiling all of their requests for the next year. And then what we'll do typically is pull all of those departments in for a meeting in November to specifically talk about the capital requests. Typically, our capital in the last few years' budgets has been around $6 million. Those initial requests, though, have come in around $8 or $9 million. So we do a lot of work to really whittle that number down to something workable. Then what we'll do in February, once we have those capital budget requests, in addition to our operating budget requests, we'll sit down and begin meetings with the Township Committee to really look at that budget as a whole and start to whittle it down to something that will be workable for a reasonable tax levy and tax rate. Once those are completed, we do a series of two budget presentations. The first towards the end of March, early April, and that's for budget introduction. That's when the Township Committee approves the budget, and then the following month, usually towards the end of April, we do another budget presentation. We hold a public hearing on the budget, and that's when, if all goes well, the budget finally gets adopted. So, you know, it's a long budget process. We're working on it from September to essentially May each year to come up with that budget. This is a look at this year's budget and the proportionate share for each one of these budget categories. So you can see, not surprisingly, public safety at the top of the list there at about 12.7% of the total budget. That funds our police department, 39 uniformed officers, all of our crossing guards, the purchase of all of our police cars, our Office of Emergency Management. It funds the aid that the township provides to our volunteer services, fire and first aid, as well as our uniform fire code. Second highest category at 12.66 is the capital budget we were just discussing. So for 2023, that came in at $5.9 million. And that's, of course, for our larger infrastructure maintenance, purchase of larger equipment, and replacing of larger equipment. The third highest item is actually our reserve for uncollected taxes. So going back to what we talked about as far as the township being responsible for paying 100% of the school and county's levy, this is one of the tools that we use to ensure that we're able to do that. So it's a statutorily required appropriation that we must include in the budget. It's roughly $4 million. In the event that we were not able to collect sufficient funds to pay out levies to the school and to the county, we would charge out this budget line and use this. And again, fortunately, we're very fortunate to have a high collection rate, so we typically do not have to touch this. The benefit of that is that at the end of the year, that amount gets rolled over to surplus, and we can use it to fund a future year's budget. So that budget line, while it's a significant piece of the budget, kind of rolls perpetually to help us fund each year. I know our Public Works Superintendent is going to be doing a presentation on his operations, but Public Works, you can see here, is another one of our large line items at 8.95%. And just a high-level view of what Public Works does. 4 divisions within Public Works: roads, buildings, grounds, and fleet. And they also handle snow removal every year. So when we talk about grounds, we're talking about maintenance of 111 miles of roads, 70 miles of sidewalk, which roughly half of those are considered primary routes and are treated for snow in Berners Township. The buildings division maintains this building, our police department, the engineering and public works facility, our health department, community center, and the grounds facility. The grounds division maintains all of the township parks, and the fleet division maintains roughly 150 passenger vehicles, trucks, and heavy equipment, and 250 pieces of small equipment. Snow removal is obviously highly dependent on the season, but in recent years, the cost for providing snow removal in town has ranged anywhere from $300,000 to $800,000 for the year. So another large line item. Just want to point Public Works out because that's a lot of service coming out of just this one line. And then the last one I'll point out is our general government at 7.27, and that includes about 44 employees. That's our administration, HR, municipal finance, clerk's office, purchasing, IT, tax collector, tax assessor, and engineering. So that's a snapshot of the pieces of this year's budget. So then again, looking at that example home assessed at $500,000, we can take those percentages from the previous slide, apply that to the municipal portion tax bill that we determined earlier, and come up with really essentially an itemized list of the cost paid by this home for municipal services this year. And I think, this is just a good illustration to see, exactly what, how much am I paying for what. So we've started doing this the last couple of years and included this in our budget presentations. And then the last piece on the capital budget that we wanted to touch on. So again, the capital budget is part of a 5-year capital plan that we maintain in order to project long-term infrastructure and equipment needs from the township. Each year, a portion of the budget is dedicated to capital projects. As we mentioned, that's roughly $6 million every year. And again, those capital projects include our larger, higher cost infrastructure expenditures and our equipment purchases. So as Joe mentioned, we are debt-free, and we operate with a pay-as-you-go philosophy regarding capital expenses. And that means that all of our capital projects are funded from the current year's budget and don't require debt issuance each year. The 5-year capital plan, while it's required to be a part of our budget every year, it's really a useful tool for us, particularly because we operate pay-as-you-go. We use that to try to forecast and try to anticipate what some of those larger projects might be, so that we can plan appropriately to have funds available for them. So that's an extremely useful tool for us every year. And once again, we are debt-free. The last of our open space debt was paid off back in 2017. Prior to that, the last time that Bernards Township bonded for a non-open space purchase was in 1991. So this is really a long-standing philosophy of the township to operate on a pay-as-you-go philosophy and stay debt-free. One of the things that really helped us to work towards that goal, to aggressively pay down our debt and to aggressively continue to fund our capital budget with cash from the budget every year, was the sunset of the municipal open space tax in 2018. So prior to 2018, there was a separate line item and a separate tax item for open space for Bernards Township specifically. That tax levy expired back in 2018, and at that time, the township committee determined that we had met all the goals that were intended for that tax levy, so they allowed that levy to lapse. And now what happens now is we're able to allocate that tax levy, which totals about $2 million every year, to our capital budget to ensure that we can keep up with all that infrastructure and maintenance in our capital budget. And we work to maintain that zero debt, but it does require some careful planning. Okay. So this, fiscal stewardship is really the key aspect for us in finance. So we leave the operations to the professionals in our public works department and our police department. They're the ones who know how to best deliver those services. What we're really concerned with is, are we providing those services as cost effectively as we can? That's what we spend a lot of our time thinking about and looking at, particularly as we get into the budget. And we want to make sure that we're maintaining Bernard's strong financial position for the long-term foreseeable future. So there are a number of metrics that we keep an eye on to see how we're doing in that regard. This chart on the right is just one of those metrics, and this is looking at property tax rates. So this is Bernards Township total rate for 2023. The top piece is the municipal portion, school rate, and county rate. And this chart compares that to the average rates in all of Somerset County, and then the average rates in the whole state. So you can see if you're looking at just the municipal portion, we are well under half of what the average is as far as a tax rate across the state of New Jersey. Let's see if I could pull up some of the other metrics that we look at here. So this is an infographic that we put together a few years ago. We post this to the finance page of the township's website every year, and it looks at a couple different couple different metrics. The first, this graph is looking at the growth of the tax levy over 17 years. So from 2005 to 2022, Bernards Township here in green, over those 17 years, our tax levy has increased 24.34%. These are the averages for each county, and then this red bar here is the average of the tax levy increase for all of the state of New Jersey. So you can see, average state of New Jersey increase over those same 17 years, 89.66%. So this is really what we're talking about when we're talking about controlling the growth of the tax levy. And again, that's the real important factor, in my opinion, certainly, because again, that's the total pool of funds that we're looking for to fund our operations. This chart looks at debt and taxes per capita, and we're comparing here to a number of Moody's AAA bond rated municipalities. Now, Bernards was last bond rated in, I think, 2007. We haven't subsequently been rated because we don't have any debt, but we certainly believe that this is a good group to compare ourselves to. So Bernards is here in green. You'll see we are actually the only town in this group that carries no municipal debt. So we're just comparing the municipal taxes per capita. For us, that number is 861.62, and you can see we're essentially tied for second lowest out of this group as far as taxes per capita. And then the other piece that we look at is reserves per capita. So this is that surplus number that I was talking about that we use to fund about a third of the budget. So when we look at this number, we're really, concerned two aspects. One, we don't want to be too high because you don't want to be sitting on a bunch of surplus that could be otherwise used to lower taxes, but at the same time, we want to make sure that our reserves are healthy enough in the event that we need to use them. So here's Bernards in green again. So our reserves per capita as of the end of 2022, $640.89, and the average of these AAA towns is $581.33 per capita. So we're right there, just over the average, which we feel is a good position to be as far as surplus is concerned. And then these last two, we looked at this chart earlier as far as the share of the total tax levy amongst the school, county, and the township. And this chart shows the growth since 2005 of each levy. So the township in green, 17.3 million in 2005 to 21.9 in 23, and the same for the county and the school. So this again is posted on our website, as well as all of the official budget documents. Those are all up there. Our budget presentations are up there. The annual financial statement is always posted there, as well as all the audits for anyone who might be interested in perusing that information. So that's really all I have. Certainly happy to answer any questions, and just want to thank everybody for coming tonight. You have all certainly done your civic duty for the week, coming and hearing about municipal finances and the budget. So thank you very much.
Thank you.
Chris.
Great graphics and wonderful information. The one slide that really hit me, like between the eyes, was the dollar bill.
Yep.
That was like a wowza.
Yep.
And I have lived in Bernards Township all of my life. I went to kindergarten, graduated in 19, and graduated from Ridge High School. Went away to school, came back, I've lived here. My parents paid taxes, and it's a wonderful school system. People move here because of the services that are provided, special needs, special programs, art sciences, whatever. And it's extremely attractive for people to move here. What I'm looking at is for how many years that I lived here, my parents paid for me to go to school, and then continued on for others to go to school. My husband and I, no plans for anybody else going to school here. He's an old guy. He's been paying property taxes that go toward the school for over for over 50 years in our house. So we have paid for many generations to go.
Sure.
So as a senior, and we attended the senior program, it was absolutely wonderful, by the way. But in hearing that demographic was like 16%, I'm so excited, but I went to Ridge, so I'm gonna remember that 16%. The demographic of the seniors there, is there any consideration, or can there be consideration for the seniors to get any kind of consideration for all the years you've been here, and whether it's based on someone's age and they pay taxes here and they don't have children going to school, or if it's even looking at if you've paid taxes for 30 years, you get X amount consideration, a certain percentage. If you're here for 40 years, 50 years, that there's a percentage off, because I feel we have paid it forward. And I'm excited that, you know, the kids love the school, and we talk to the kids in the neighborhood, but at some point, it just seems like a lot.
Yep. Yep. So I'll try to repeat the question for the recording. I'll try to summarize. So
Good luck on that.
yeah. So essentially the question is, you know, we've been living in town for many, many years. We've put our kids through school, but our kids have been out of school for many, many years, and we continue to pay to fund the school system. Is there any consideration for folks who have, you know, paid over that time and no longer have kids in the system? I think that's essentially the gist of it, right?
Yes.
So you know, that's the challenge, and that's really why we put that graphic together, to kind of illustrate the pieces of the tax bill, and to illustrate the small piece that we as the township have any kind of control over. And unfortunately, the answer really is, you know, no, we have no control over what the school levy is. You know, responsibility for payment of taxes for all districts in the municipality that you live in are dictated by the state of New Jersey. So currently, unfortunately, no, there is no consideration for that kind of change.
So it's by the state, so there's no
Yep.
door to knock on. It's not like going to the Board of Ed meeting.
No,
to say anything.
that's
It's
above
different.
my pay grade. You have to get in touch with the governor's office.
I'm gonna say, bring it up to one of the state elected officials as a concern, or the governor, absolutely.
Okay.
Yep.
Oh, sorry, I wouldn't have gone through all that.
No,
I
no-
knew it
no
was a
problem at all.
state thing.
Yeah,
I
it's
was
no
thinking
problem.
there could be consideration. I know people in other states that, that do benefit
Yep.
from being seniors and being in a thing.
Yep.
Okay, thank you, everybody, for listening to my story.
No, that's why we're here, to answer questions like that, you know, that we wouldn't necessarily think of when we need to go through the checklist of items to talk about when we introduce the budget. You know, these are the things that people are thinking about, so these are the questions we want to answer, so thank you. Yes?
Yes, so one question I have that might touch upon this young lady's question is, you talked about surplus increasing over time, and I think in one of your presentations you said that in 2021 you were ultra conservative about revenue coming in due to COVID, but actually more revenue came in than expected. That's going to hit the fund balance, right?
Correct.
And so the surplus has been growing over time. At what point, and you even pointed out that we're in the middle
Mhm.
compared to all these different municipalities. At what point do we say we're going to reduce the tax rate because our surplus has reached so high? And is there more creative ways of saying, oh, we're going to reduce the surplus by giving tax breaks to our senior citizens in town? I recognize that the municipal budget is only 15%, and even if you eliminated the whole municipal tax on senior citizens, it's a reduction of only 50%. But so to wrap up, which is at what point do we say the surplus is high enough to give back or reduce the taxes to our taxpayers? And then if we give back, can you be discretionary about who you give it back to?
Okay, so I'll try to summarize. So the question is basically, at what point do we say, okay, we've established a level of surplus to where we could start to use it to help offset tax burden on certain residents in town? You know, I don't know that I could give you a specific number to say this is the point at which we'd say we need to start spending down surplus, but certainly, you know, something like this, you know, that we track helps us to determine, okay, where are we? You know, if we started to see ourselves moving farther and farther and farther over this way, that's when we might start looking at what we can do to start using some of that surplus to reduce the tax levy. You know, one of the things about surplus is that, you know, there are a number of pieces that go into it. So as you also mentioned in your question, we were conservative in the amounts of revenue that we anticipated after COVID, because a number of those revenue sources had dropped or almost disappeared entirely. So, you know, we need to make sure that we kept those low, and we did. We were very conservative about it. And as you said, those items have started to come back. And that revenue in excess of the amount that we anticipate does, in fact, flow to surplus. There are other pieces such as unspent budget, right? So our budget for 2023, anything unspent will stay in reserve for 2024. After 2024, anything that's then left will then roll to surplus. So, you know, as well as things like that reserve for uncollected taxes. So, you know, in some years, they're not necessarily consistent. So while one year we may have lots of revenue in excess of what we anticipate, the amount that we spend on appropriations is much lower, so they balance themselves out. So it's really a matter of looking at surplus increase overall, and this is really what we're trying to do with this example here. Now, as you also asked about specifically discretionary, you know, that's something that I would have to look into to see if we'd even be able to do something like that. Off the top of my head, I would say that most likely, if we were to start using surplus to offset taxation, it would probably apply across the board for all Berners Township residents.
Along the same lines, have there been other municipalities that charge a different rate for residences versus commercial and industrial properties? Because you show the breakdown.
Yep.
Can you charge certain groups a higher rate, or is it required by law that every property is charged the same rate?
So the question was, are there towns in New Jersey who assess different property tax rates depending on the category of a property, residential versus a commercial property? And the answer is no. In New Jersey, we're required to apply the same tax rate across the board to all properties. Now, that's not to say that the assessed value for each of those property classes changes. So the example of that is this year. So commercial properties for 2023, I think value increased about 2.5%, while residential properties increased almost 8.5%. So that does mean that tax burden is shifting more towards the residential because commercial isn't keeping pace with the value of the residential property increases. But that's kind of the, you know, one of the main tenets of ad valorem tax assessment is that the portion you pay is based on the current value of your property. Yes?
Following Mr. Desiato's presentation on purchasing and requisitions, I think we said the minimum threshold was 44,000 for a bid process, and then what's the level of review? How do you review an RFP that comes in? And then where I worked, you had to have, depending on the threshold, you had to have different levels of approval and review. How does that work here
Sure.
relative to the township?
Sure. So the question was, what are the different levels of review as far as proposals, RFPs, and bids when the township goes out for purchasing? So I don't want to get too into the weeds as far as local public contracts law, but essentially there's differentiation between professional service and for a bid purchase, right? So a professional service uses the RFP process where proposals are submitted. Those proposals are reviewed by a township committee, and the township committee then has the discretion to award that professional service contract to whomever they choose. Conversely, for a public bid, there are very strict guidelines that dictate who must be awarded that bid, and essentially the most responsible bidder who gets the award of that contract. Responsible bidder doesn't necessarily mean the best cost always. There are a laundry list of requirements for individuals who want to contract with a municipality, and the bid package that they have to submit is substantial. Some of those requirements are what are considered fatal. So if a bidder misses a particular document in their bid, while they may be the lowest bid, we cannot by law award that contract to them. So, that's kind of the double-edged sword of local public contracting, is that it focuses on, stewardship of public funds and tries to protect against fraud, and not necessarily always focuses on, the most advantageous price for the township. So that is a challenge. But generally speaking, those are the two main types of contracts that we enter into, and that's how they're evaluated. Yes?
So you mentioned for professional services, the township committee can reward the contract to anyone they want. How do you track conflicts of interest? Is it an honor system, or do you ask members of the different committees and the township committee and even staff members, what affiliations or ownership that they have?
Yep, so the question was, as far as professional service contracts, what is the oversight in the award of those contracts by the township committee, right? So there's actually legislation, the pay-to-play law is what dictates the information that we need to collect from individuals who submit proposals for professional services, and they are required to disclose political contributions, percent of ownership of the company. So that's all public information, and that's all information that we're required to get from all of those professionals who submit proposals.
Do you collect the same information for not just the people submitting the proposal, but do you collect the same type of information from people who are working or serving in township?
Question was, do we collect that same information for people who work and serve for the township? That wouldn't fall under pay-to-play. However, there are financial disclosure requirements for all township officials and certain township employees. So that information is handled by the state, and all of those individuals are required to file that information. And that gets into, sources of income, property owned, ownership of companies, gifts and bequests you may have received, all that kind of information. And that's also public information. Sure. Any other questions? Sure.
So one of the questions I had was relative to state, local, county, federal funding. And I think if I could barely read, I'm sorry, the chart. But I think that about 4.5% of the revenue is from grants. And so to that extent, what opportunities do you see, like the new infrastructure bill? What are some potential opportunities as you look into the future to help bring new revenue to the township?
Sure. So the question was relative to grant opportunities and grant funding that we include in the budget, and what do we see as potential future opportunities. So, the biggest one for us recently has been the American Rescue Act funding. So the township did receive just about $2.8 million from the federal government as part of that package. We're using that to fund capital projects in the 2022 and 2023 budget. Moving forward, there are there are a number of grants that occur on an annual basis, and those are ones that we always take advantage of. As far as seeking new grant opportunities, I kind of rely on our department heads who work in their areas, know what grants are available, to tell us what grants they want to pursue, what grants they want to go after. One of the challenges that we have here in Bernards, it's a challenge, but it's a good thing, is that many of those grants are based on financial need. We're fortunate to live in an affluent community, and for many of those grants, we are simply not eligible. So that's a challenge. Not to say that we aren't eligible for for still many grants, and we're always keeping an eye out for new opportunities.
John, thank you for that,
Mhm.
and thanks for this presentation. Have you ever conducted, to what extent, like a cost-benefit analysis of having a grant writer, either subcontracted? Like some municipalities do that, $2,500 a month. I know in Fanwood, they've done that. They've brought in about $2 million in revenue. To what extent has that been pursued?
So the question was, have we done a cost-benefit analysis of potentially hiring a grant writer? We have not specifically done that, but certainly something we could look into in the future.
Just to piggyback on that about with the grant writer, is to look at opportunities. There's so many colleges in the area for students doing internships in public administration or whatnot, that to bring them in and utilize their talents and researching grants and writing grants.
Yeah, absolutely, absolutely. The comment was, look to colleges and students who might be interested in doing internships for that kind of work. Absolutely. Any other questions?
So you walk through the process of creating the budget each year.
Mhm.
You said that you start in September, in November, the department heads meet and you whittle down the capital budget from 8.9 to 6 million. My question is related to the level of involvement that the township committee has in setting and finalizing the budget. So, like, what guidance does the township committee give you in terms of changing headcount for public safety, new projects for DPW, or priorities in capital purchases?
Sure. So the question was, generally, what is the level of involvement of the township committee in formulating the budget every year, right? So, ultimately, it is the township committee's budget, so they have the final say on anything that happens in the budget. The work that we do leading up to February is compiling something that's workable. So we don't want to go to the township committee and say, here's a budget, we need to cut $6 million out of this budget. We feel that it's our responsibility to get it down to something workable, and then allow the township committee to make the final decisions on that budget. As far as things like headcount and project priority, there are subcommittees of the township committee whose responsibility is to review those kind of things. So, something like the subject of headcount in the department, if that were to come up, that would actually be handled prior to any discussions on the budget. So that gets approved by the township committee before we even begin to work on the budget. And that's really, that kind of pre-approval is what allows us to get the budget to a workable point, and then bring a product to the township committee to finalize.
So to conclude, would you say that the township's sound financial management is largely due to seasoned professionals like yourself, your team, and department heads?
Question was, would I say that the financial position of the township is due to the work of our professionals here? Certainly, I cannot take credit for the great position that we're in financially. That's been the work of both committees and professional staff over many, many years to get us to the point that we are. So at this point, our focus is to maintain that as best as we can. But it's a group effort. It's staff in conjunction with elected officials. It's staff in conjunction with rank and file employees who are on the ground. So it's really a group effort. All right. No problem. Go ahead.
Okay, so I've, I think one last.
No problem.
One last question is really about the unbudgeted one-time items that hit this year's budget. For instance, with the dissolution of the Liberty Corner First Aid Squad, it was reported on the Bernardsville News that the township got $200,000 from that event. Does that hit the fund balance, or are you going to use it to do other projects that have been waiting in the sidelines but have not been in your budget? Along the same lines, there's a new road that was passed behind the high school
Okay, so two-part question. The dissolution of Liberty Corner First Aid Squad, did the funds that came to the township from that event roll to township surplus? No, the answer is no. So we actually, as part of that arrangement, have set up a special reserve. It's actually a budget rider that's approved by the state of New Jersey. We had to file with the state to set up this budget rider to set those funds aside. And it's stipulated that they can only be used for purposes of first responder costs. I don't know what those costs might be in the future, but that reserve is set aside and can only be used for that purpose. Second part of the question was the new road connecting the school property to the township lot, and how that was budgeted and paid for.
And the new playground.
Okay, so the new playground was specifically budgeted for in the 2023 capital budget. That's a line item in the budget. That paving project is a relatively small project in the grand scheme of all of our road management. So we have a couple places in the capital budget where road work is budgeted. The lion's share of it is budgeted in the engineering capital budget. But DPW also has a sum of money that's budgeted in their capital for general road maintenance and repaving. So DPW will typically tackle some of those smaller road jobs, and that was one of those. So that was part of their general road maintenance budget for 2023.
Thank you so much.
Sure. All right. Thank you all very much. I appreciate you all coming.
So again, thank you, Sean, and your team. They're very humble about what they accomplish, and we on Township Committee rely on their expertise to help us. Like as an example, this past year, the budget was very difficult to try to come in at that rate because we got hit by the state for a 24% increase in health expenses for our employees. 24% increase. Inflation has hit everything. And to try to come in at that 2%, what did that do to the reserves? What capital projects could we not do? It was a very difficult discussion. That wasn't the only double-digit increase that we got hit with. Was it 11% pensions for one population and 9% for another? So these are numbers that stick with, that it's like, those are well above a 2% increase, right? So there were significant trade-offs that we have to make very difficult decisions on, but because of the heritage of those before us and the decisions that they've made and trusting our township staff, that's what we delivered. So we do hear residents that are on fixed incomes and such. We know that, unfortunately, the municipal part of the budget is a small number, but we're very conscious of what that means to every individual and being thoughtful about trying to keep things as fiscally responsible, but also delivering the level of service that we residents need. And that's one of the things that I'm so proud this staff, and quite honestly, all of the staff, whether it's Parks and Rec, DPW, engineering, everybody works above and beyond for all of our residents. So, and tonight's presentation is a perfect example of that. So I would like to thank each and every one of you. Feel free to watch this once it's uploaded on YouTube. We'll see how many hits this one gets. But again, gentlemen and the rest of your department, thank you for all that you do for us. And thank you all for your great questions, and have a good evening. Thank you.